But home prices are not crashing anytime soon. Yes, I hear it in a lot of places, but hey, this episode is brought to you by common sense and kindness. Common sense, go out and get some, and kindness, if you're not going to say anything nice, don't comment at all, but feel free to comment below and subscribe. I would love to hear your comments on what I'm about to say and all of the other videos that I have. The last one I did before I got sick 2 days ago was really good. We had a lot of great comments, a lot of great interaction, and today I'm going to go over one great article that we've got from Fortune slash Corelogic. It's an interactive map that shows if we do have a housing problem, where are the areas that are going to be impacted the most? But first, I've got to talk to you about why we have inflation. I mean, that's a whole different topic, but some people, now that I'm diving deeper into this, some people are saying inflation, the inflation we have right now, is primarily caused by what happened during the pandemic, by the Fed really pumping in a lot of money right through the bonds that they buy. Now, I want to show you something really quick, just something from Investopedia, so you can understand what the Fed actually does. And this was pretty enlightening. It says if the Fed buys bonds in the open market, it increases the money supply in the economy by swapping out bonds in exchange for cash to the general public. That's what they did during the Great Recession a few years back. And this is what they did again in large amounts during the pandemic. Now, this is what's happening now. Conversely, if the Fed sells bonds, it decreases the money supply by removing cash from the economy in exchange for bonds. That's what's happening right now. That's what's causing our rates to go up because they said, whoa, inflation, I think we caused this. Let's kind of take a handle over it and maybe raise the rates to decrease the money flow. That's where we're at right now. Now, let's go through the article that I've got for you because now it has the interactive map. That was my favorite part. And of course, I'm going to put the link in here as well for you. So let's get into this. This is the article. It's called The Odds of Home Prices Decline Hitting Your Local Housing Market. But first, it's by Fortune. I had to print this out so I could highlight and show you the important parts to this. Now, it says, historically speaking, that inflation fighting playbook, we already went through this, is that the Fed usually pushes up the rates. In this case, they're doing the same thing. And here's the problem. In a 30-year fixed mortgage, when it's at 5.11, right? And look, most people have a lower rate right now. Even though the average about a year ago was at around 719, their FICO is now in the sixes. So if we're looking realistically where people's FICO is right now, it's higher than lower than 719. It's probably around 670. And that rate is much higher if your FICO is lower. But let's go with this. Look, it used to be 311 in December. If somebody was purchasing a property for 500,000 right here, their payment would be 2,138. That's not including property taxes and everything else. At 511, look it up. It goes $600 up, right? That's a lot. That's a really nice car payment or other things. But this is why people are canceling Netflix, I guess. Can't afford this. Here we go. Let's go down a little bit more. Now, people said, look, even though rates are up, it doesn't mean home prices are about to crash. In fact, every major real estate firm, and of course, every major real estate firm would say this, but they're saying it. They're saying, hey, we're still predicting home prices to climb further this year. Now, the good news, let me just talk to you really quick. The good news is even non-real estate companies are saying we're still going to see an increase in home prices, which is nuts, right? Even though rates are going up. Now, they're also saying if rates go up past 7, then maybe not, but we're not there yet. So far, so good. So let me go back to this. And then I'll get to that awesome, great little interactive map. All right, Corelogic. Here it is. Corelogic, which ranks 952 on the Fortune 1000. That's just for SEO. I just noticed that. That was smart. They just put it in there. Put housing markets into one of 5 categories based on likelihood that home prices in that particular market are to fall over the coming 12 months. Now, here they are. Here are the categories, and then we'll get into the map. It says elevated. That means over 40% chance of price dip. 30 high is 30 to 40% chance, medium 20 to 30, low 10 to 20, and very low, that's practically not going to happen. Then we have that. Now, check this out. Here is the map. I'm going to go to it right over here. It says the odds of regional home price dropping. And now this is cool for me because I'm looking at this and see as I go through, I'm going to zoom in a little bit more for you so you can see it here. You can see very low, low, medium, high. I'm in California. I'm a real estate agent out here in California for almost 20 years. I own multiple businesses all throughout the United States. And I'm looking at this and I'm like, oh, this is kind of fun. Now I look at here because I'm out here in Ventura County and it's a low, right? That's pretty good. I'm pretty happy. But most of California is pretty low. Some of it's medium. Let's take a look at, for me, elevated. I want the elevated and look what happens. Not a lot. Not a lot, but look what we've got. They're all scattered. There's even one in Hawaii at the bottom there. And for some reason, we've got two areas in Seattle, which we saw in one of my other videos. People are moving out of Washington into Phoenix, right? And look, people in Salem, Oregon, high elevated. Now, if you want to dive into this article, you can do it more and figure out why they chose, why Corelogic decided these are elevated. It's in here. I just don't want to bore you to death. But look at medium to high over here on this side towards Connecticut and what is this, Massachusetts, which I was just in Boston. I love Boston. And look, all this area said it's a little higher, which is interesting. But look, our favorite place. Well, I love California and I love Florida, right? I can do that. It's very low. If you go to the top over here, it says very low on the top left. Well, look at all the very low areas as I hover over that. Those are the very low areas. I mean, you know what that's telling me? That's telling me as a real estate agent, as a real estate investor, maybe I should look at these places and buy because I know that not just real estate companies are saying that the markets continue to go up as long as rates remain under 7-ish, right? Now it's, these areas may be good to invest in. Now, multifamily, because rents are up. But it's important to look at this and put emotions aside. This is why I said this episode's brought to you by common sense. Let's use some. And kindness, be nice. So, now with that, I want to go back to the original article that I'm reading to you. After we go through that, I love this one. It says, Corelogic still thinks the chances of prices declining in 2022 are fairly low. Why? Pay attention to this one. The real estate research firm points to the mismatch between inventory and strong buyer demand. That's also forecasted in its national forecast where it says Corelogic predicts U.S. home prices are poised to rise 5%. That's a deceleration from the 19.8% jump posted over the last 12 months, which is massive, right? That's a lot. Now, this is the end here, but George Ratiu, a famous economist, you can look him up there. But he said that we're not in a housing bubble just yet. Now remember, just yet because interest rates aren't crazy high, even though they've jumped up super quick. We're skating close to one if prices continue to rise at that pace. And that's why the Fed stepped in as well and said, hey, maybe we need to do something about it. It was almost like if it was a surprise to them, which doesn't make sense. So it makes me feel like it wasn't a surprise. Right, but it was. It's like, hey, let's do something about this before it gets out of hand. I mean, geez, it's everywhere. And just that's the point, because what we need to look at is we need to stay focused on not using our emotions when we're making decisions. It's still a good time to move. If you need to move. Right? There are thousands of people still buying homes, and we're estimated to go up throughout the year. If you don't need to buy and the rate pushes you out of being able to buy, then chill and wait. But rents are still high. So let's use some reasoning. Don't listen to all of the alarmists. Let's use some logic, read, watch these videos, subscribe, share with other people, talk it amongst yourselves, and do me a favor, comment. Comment, because I actually read the comments and I respond back. And I'm not a dick about it. I'm really nice. So if your comment contradicts me, I love it. I want to know why. I dig into it, right? And this way we can become friends through YouTube or Facebook. Subscribe, share this. Have an awesome day. I'll see you tomorrow. And I might wear a different hat. So thanks.